Breakfast Club. My name is Darren Hancock, and this is ThetaWaveTrader. Let's have a look at the market. It's been having some crazy up and downs this last couple of days. Let's have a look at the hourly chart first so you can see the craziness that's been going on, which I'm sure you've already seen. So this was yesterday. We're in this consolidation, and we didn't quite take out the highs we were looking for. Rolled over, and then finally all we did was just come back into this breaker one more time, like multiple times. It looked like it was running for these highs again, right? This was like full on when this was forming as a yellow candle. I'm sure people were thinking we're going for the highs for sure. Quickly slammed it back against all this engineered liquidity. Like huge run back down. Filled this little bissy down here to the pip. Look at this. Right to the bottom. Nailed it and then sent it higher. So it stopped here, gapped up at the open, and then just drove all the way for new highs. Now we've got a change in direction here. We've traded below it. Didn't get an opportunity to get in on it. So look at this and think 50%. You want to try and get in on this on a 50%. Or higher from a premium to reach into a discount. You don't get it here. You'd have to look down to the lower time frames for this hourly level. So we're going to put this new premium right here. As you can see right now, it's already hit the top of it. So now you're looking for any type of reversal. But anyway, we're looking here a little bit as we go down into the time frames here to see if there would have been an entry here that we could have caught to run all the way back down lower. If you don't get that one, you're looking at this next one down here. I know we did run back into the breaker. The mean threshold of that breaker did drop below it a little bit, and we dug all the way back down into the parent breaker of that whole run higher. Then we had a break above. So we've got this SIBI that's formed here. And again, we'll have to look for the new day opening gap to see if there's something that tags that and sends it higher. So what you'd like to see is this close above here. Come back and tag it. Somewhere around 543 to 508. Remember those numbers. And then send it for a rejection block and the new highs. That's what I'll be looking for. Unless this stays reacting off of here and turns around and comes back down inside this range one more time. Because we haven't had this opportunity filled yet. Now that that's been revealed. Now I want to see if we start driving back down again and we start to compress here. Though this is the week, we have one more week left of the markets potentially making a new high into the first 7 to 10 days of May. And then we're looking for that reversal on the daily chart. So let's go down into the 15-minute. Look right here. I just want to make sure that this is live. It is. Well, at 5, good morning, Hadith. First through the door this morning. We've got 5 people watching. Good morning, everyone. Now let's look at the 15-minute. Okay, so nothing here on the 15-minute for our reversal. No. We did get it right here on the 15-minute. When we take out this little swing point here, drop below, come back in, perfect tag, and then finally drop lower. So you would have waited a couple of hours after that turn. And that's the premium array. So I want to see if we get a tag of that premium array earlier, like somewhere in here. We get down to the lower time frames. Either way, you'll see that we have a small swing here. We have a SIBI that forms. Body runs above it, comes down back for a perfect entry here for a long. Take the high, pay yourself. Model 3, and then model 4, come back, tag the high, send it higher. Looking for the bull trap. Take the bull trap to the upside. Excellent. Pay yourself. Looking for the premium. Pay yourself. Now you want to see support. Come back and tag the bull trap. Come back. Tags the bull trap. Sends it higher. We're into the premium level now. And you filled it perfectly. So you've got scale out 1, 2, and 3. 3 different scale outs inside that trade in a 15-minute chart. So now what you're looking for is a model 3 continuation. So you want to see this close above here, but not break the high. Tag it, send it higher. Wait for this candle to get taken to the upside, and it almost overlaps with the high anyway. So look for a retest and a model 4 continuation. If not, if this rolls over here, I'm looking for this level to get taken on the downside. Come back, trade into it, send it lower. A lot more resistance on the way down. Okay. This was nice and clean. Nice, even little bull traps. First one, buried inside this one, so you'll have to use the bigger one. Tag it, send it. Tag it, right there, send it. Simple models, but they work. And this is when it's clean like this, and you've got nice down candles without anything mess in the middle. You got a little cluster here. Revisit, go lower. Revisit, go higher. Revisit, go higher. It's the same thing on both sides. Okay. Let's go down to a 5-minute chart now. 5-minute almost gave you the entry right there. I suppose it would, but it would have been the entry right there. Watch. This is the go, no go zone. It's a tiny one right here. Body comes back into the no-go zone, tags it, sends it lower. So that's the closest you would have got to that hourly fair value gap we were looking at, that BISI, that inversion. That would have been the closest you would have had to tagging that, and you still never did. But you got the no-go zone, or this little breaker right here. Yeah, sends it lower. Reversal, change in direction. Candle that continues through 1, 2, does not take out the third. So look at the second one, comes back into the second one, sends it higher. Revisit the high, revisits the high, sends it higher, revisits the high. Bit of wick action, but sends it hits the high, sends it higher. Watch for this. You trade through that now. On the downside, it's hit the rejection block. So now you got to wait for a Model 3 or a reversal. So you had a no Model 3 here that drives straight back through it all. We have bodies break this high, so typically you want to see this candle's midpoint hold. It gives way, hits the midpoint, and comes lower inside this small little range here. On a swing, first candle to the left. You've got them together, so you have to add them both together. Midpoint is held. Bodies respect that. Sends it up higher. Body breaks the high. You want to see this again, hold midpoint. It holds there and then starts to drop. Drops right through the SIBI. Comes back inside the SIBI, sends it lower. Finally takes out this low. So wait for this candle to get taken to the first candle to the left. Gets taken to the upside. Do we come back and revisit it? No, it reaches for the next high. Then look for a retest. Just shy of the retest there. Just shy of that. Takes out this high as well. That's the high you're looking at. Look, keep your eyes on these ones over here as well. Midpoint here. Draw it across. Right there. That's the bottom of it perfectly there. Watch this level. Trade it up. And look at this. It came all the way back into it. Just tagged it one time. And then send it higher. So now I'm looking to see if we break this high on the 5-minute. And you're targeting these bull traps above you. Okay. And we'll put that back to 15 minutes. Close that. Now we'll see if we'll bounce off this 830, drive back through, or come up, tap, send it back to the midnight open. If we're going to go lower. Good morning, Hans. I'm about to rewatch Time in a Bottle by Darren. Definitely worth a visit. Thanks, Hans. Yes, it's where's our little, why is our candle not on right now? Oh, it's new hour. We should see a first little button coming up here at number 2. Morning, Derek. How's it going, buddy? There's the first little button on the number 2. Now, typically, this makes the most common swing point. Of all the numbers they give you in the Time in a Bottle, this is the most common. It's interesting though, when you look at that, this 2, and then it's opposite, which is the bottom of the hour, Crazy Ivan. What's the turning point? 27, 30, 32. So exactly 1 hour later, or half an hour later, you should be seeing the bottom of the candle, the hourly candle. How's everybody doing this morning anyway? Y'all good? There, just hitting off at 8:30 now. So this is like the first early squabblers of the things. You have 2, 3, 4, 5. Then 7, 9, and 10. Then you got some squabblers 11 and 12. in 16, 17, 18. I like this. So this is looking for these highs now. Rejection block's just been hit. Let's look at some other ones here. I got another 12 minutes or 26 minutes before the next one. You're looking for a retest right here, and then send that higher. Come right back into this midpoint and send that higher. And I remember to get out of there. Well, morning in DAX, it's up 600 points since this morning. So anyway, I'm looking for this to go higher. This is a Model 3 right now. Barely Model 3. It's just closed on or above that level. So I want to see that just reach for a rejection block, extend the range, and then you're looking for continuation, Model 4. We're sideways in the Dow. Oil. Well, oil sure gave us a run yesterday, hey? It's nice. I think we're looking for that to go higher too, aren't we? Wow. That sure is mucking about. You got to stay on I think a higher, when you start seeing all this chop here, it's probably better to stay on a higher time frame. It looks a little clearer. Look how clean this is. A lot easier to manage your trade from there. Oh, that's beautiful. That's beautiful, man. So premium level, right? Run down. This was filled but not traded above, right? So we created a new low. Then we got this one here. We have not traded above it. You fill it, then you trade above it. Then we're looking for this to get tagged before that. Like we want to see just a body pop up above here, come back in, hit the body, and go higher. It doesn't. It just keeps running right up into that premium, hits it perfectly, changes, runs through, runs right down through 1 and 2, and our no-go zone. The no-go zone is retested perfectly right there, and the breaker, and then sends it Model 3. Sorry, this would be a Model 4. We've already extended the range, so Model 4 is an continuation. Continue through. Looking for this one to get broken on the downside. It does. You come back inside. You want to see this hold all the way up into this no-go zone here. And I'll put the no-go zone on there as well so you can see it. That's the bottom of the no-go zone. Into it. Look at that, right to the very top of it, to a data point. You look at these over here, you go, what are you hunting for? This old low here? Right inside it, no-go zone. Hits it, fills it, then quits it. You don't get an institutional order flow entry deal. Look at this next one. all the way down to the bottom of it. It's the last down close candle, or this one here before the next swing. I guess this would be the lowest one right here. Look at that one there. Right back up, perfectly hits it, rolls over and goes lower. So stick with your higher time frames on those ones. So you're seeing this reverse or change in direction here, right? We want to see a body break above the high. See how it doesn't do that until here? Then you say, all right, now we have a continuation. As soon as we get a body above here, it does. Now you say, I want to see this hold price right at its mean threshold. It does, and then runs higher. As soon as it takes out the high, you got to pay yourself. And then it reverses, and we're looking at, we don't want to see this. As soon as you start to see this, you should start getting suspicious. You want to see that start running up much higher into this range. Pull your fib tool from low to high here, and you'll see that that's at least 50% of the premium. So you have to be always getting ready to pay yourself at that 50%. So it dipped into here. That's where you buy it, below the 50. Hits 50, get yourself to break even. You don't even get 62 out of that. That's unfortunate. And then it comes back and you realize you're on the wrong side of it. The moment it closes below the midpoint of this candle, and see, look at the bodies right here. Look at, if I put it right smack on the middle of that candle, they literally close on that data point and then quickly run away from you. And you're like, I better stop there. My little stop loss is one tick below this low. And it would have come down and gave you a squeeze. And then as soon as you see that coming down again, you think that's not a good sign. You want to see that leave. And it would have come back and took your stop loss. So you wait for this. Trades below it. We're coming back into it now. We've already traded through here. This now becomes the no-go zone. I want to see this hold price and this come lower. So you're looking for a model 3 extension here now. All right, I'm looking for the model 1 around in here. Look for a drop back down into this level and then send that higher. Look for model 2 if you can get through here, come back and tag that and send it higher up inside that. We're working internal range here. Model 2 to here, model 3 extension, model 4 continuation. Simo's back. The Simo Show. Good to see you, buddy. How's things down there in Morocco? Oh yeah, well, yeah, I'm just gonna get to that in a second there. I should start continuing moving on. I did some awesome trades here in gold last night before I went to sleep. It was rocking it last night. It was working really nicely. Had some nice clean entries. Like these entries are so clean. Look at that. Just come back up and bingo. Right off of it. Model 2. Continuation. Inside a larger range. Nice. And then watch for body to break down below this level. It does right here. You come back inside, retest perfectly, and send it lower. That's the what do you call that? No-go zone. Comes back into the no-go zone, sends it lower. Also retags this whole breaker or this low candle. Either one of those is fine. I like the big one. This one's kind of buried inside those 3. Watch for the low to get broken. It does. Come back, retest, and then send it lower. Delicious. Choppy. That's super choppy right now. You're already back into 50% of that range already. And you've tagged an old Bissy. Yeah, that doesn't look clean to me right now. This is another one of those charts you have to kind of put on a 5 minute. It looks a lot cleaner when you clean it up. A sweep. Look at the first candle to the left. That is a bull candle. The body trades through it. Look for that candle to be retested and then send it higher. Wait for the next bull trap to get taken to the upside. The next swing point. It gets taken to the upside right there. And then goes boop. Gives you one little test and then sends it up. So stick with your 5 minute chart when it's in a choppy environment like that. Things tend to be a little cleaner. It's been a long time. I've missed you guys. How you doing, Darren? I'm doing very well, Simbu. Thank you very much for asking. I hope you're doing well down there. I hope the family's safe. Everybody's okay. I hope you're killing it there on the bike, doing some big business, getting ready to do some investing. I note that yesterday's close is below us as we approach the opening. Abhijit, have you bought anything? Anything? M? Did I miss anything? No, I haven't bought anything yet. I haven't bought anything yet. I tried putting buy orders in on these this and cattle last week, and it did not put a buy order in. It said this will be a delay. Are you okay with that? I'm like, yeah, I get it. There's a delay there. I'll take it. This is a good example right here. We have a little swing. There's a nice little gap in here. We've swung below this low. We've come back into this discount one here on this swing. Break above that high. Look at the mean threshold of that candle. Beautiful. Send it higher. Take it high. Look at that. Nice big jump today. The government bonds. Look at this. Now let's look at this zone. Keep your eyeballs on this. If you're into bonds, I want to see this premium box hold price now, because now we're looking for Model 3. We're looking for an extension. I want to see this high get broken in bonds. If we trade below this level and come back into it, we're back inside here again. But look at how this old premium box here, look at how that's just holding price. Consequent encroachment holds price at or above and sends it higher to the premium, the next premium. Dixie, get along, little Dixie, and then look at these. Euro makes a nice big surge up when the American dollar yesterday. Or was that this morning? That's from 2 a.m. We got the surge up above here. Watch for this gap to get traded through and retested. It doesn't. You don't get a retest of that gap. You get the bottom of it. That's not even the bottom of it. This is the bottom. Well, yeah, it would be the bottom here because it's a bull candle. Okay. Well, so if we get another run back up into this level here, I'm looking for a Model 4 off of here. So you want to see this breaker hold price. So I want to see it come back up, hit the breaker, Anywhere inside there would be fine. Leave a portion open, send it lower. And then you're looking for that continuation on the downside. Ideally, this would have been a nice one to see one of those institutional order flow entry drills where you just see it pop up and then start driving back down. It gave you that impression, and then all of a sudden it turned on you again, started coming back up. So this is suspicious for another retest of this old low here. We're inside this no-go zone, which is right up to 5. So it literally touches the bottom of that candle. So you're looking for that retest. Touch it. You can wick through it. Not that that's a good idea. I don't like to see it wick through. But I want to see this, because this is acting like a breaker with a no-go zone in front of it too. So maybe this is all you're going to get and not hit that old one. Roll over and come lower again. That's what I'm looking for. And then that would force the British pound and the euro to go higher, or give it the strength it's looking for to go higher. It's already in that change in direction. So if we do get a wick down there and it comes back up and still closes inside here, I'm okay with that. And then send that higher. We just did those. So if this sweeps this low, comes back up, clears this out, then you got your entry in here. First target, second bull trap, premium. Take out these, and then you got a nice easy run into the next bull traps that you see sitting in here, and the next premium above you. Got some work to do though to get up there. It's 1 minute chart, so you should see something like that happening. There's some key levels to look for inside here for sure. The banks are starting running. Okay, so here, now I want to see this close below here on the daily, and then a retest, and this may be the late April, early May reversal in banks, and start to see this thing drop now. We have now dropped below. We've come back inside. I want to see that drop. If we take out this low here one more time, and the mean threshold of this candle, then I'm looking for a nice little steady run back down in banks from May into June. Usually you'll see a pump and then drop, then another small little run up in early June, and then a drive down in July. And I'm looking for July, August to come back into this this zone, or take out these lows for August and then start to grind her back up again. Traded below it, right back up and perfectly tag the high of it, of that imbalance, and then sending it lower. Looking at this target here. Interesting. The DAX is on fire. Okay, so look at that. On a 1 hour chart, you get nothing. You get nothing here because we haven't broken it yet. You're looking for this to get retested. It doesn't. It continues to run through. Ignore that one. Wait for this one. And look at that. It just hovers right in it. So you wait. Finally breaks it here. That's the only opportunity you get on the hourly. If you look at an hourly chart, to retest this zone and this SIBI, and then you want to see it break that high. If you wait for that high to get broken, it doesn't come back and give you that entry either. So that's the only entry you would have caught on the DAX on the hourly chart. There's plenty of them on the lower charts, but that's the hourly one there. And look for this one sitting here. Again, we charge right through that. You don't get an opportunity to get on that either. Look for this one now. It runs all the way above it, and you don't get an opportunity to get on that one. That's aggressive. That is the only opportunity you would have had right there on the 1 hour chart. The only one. So if we go back down here at 2 o'clock in the morning, Where's the opportunity at 2 in the morning? Right here's a change in direction. And you go, as soon as we get a candle above here, I like this for the swing low. First candle to the left, right here. As soon as the body gets above that, right there, comes back, tags it. That's the first early entry at 229 to catch that for the run higher. Then you wait for this one. Do we get a close above there? It closes on it. You go, it's got to get to stay above. It stays above. You go, sweet. As soon as it breaks that high, pay yourself, or pay yourself at these highs first, and then move your stop loss into break even, plus the cost of the trade. You put some in your pocket and leave it. Let it run. Aim for your premium array. It hits your premium array, pay yourself. Retraces all the way back down into this breaker. Sends it higher. Wait for this level to get broken. It does on the upside. Comes back down right inside it. Wait for this level to get broken on the upside. It does. Comes back down. Tags it. Sends it higher. So you would have caught many opportunities on a 1 minute chart for this huge run up here this morning. On the hourly chart, you can see the difference. But using the same principles I teach you every morning, you look for that same kind of setup. 4 models to change your life, my friends. 4 models to change your life. Anyway, if you caught any of that, Ali, I don't know if Ali's in here or not. Hans, if you would have caught that using those same principles every morning, man, you would have caught an hourly. You would have. I can definitely show you others on 5 minute and all that, but I want to get through the rest of these before the next 4 minutes. Real estate. I want to see this hold, still holding. I want to see that push higher. Disney, look at that. 20% return on your money. Just shy of 20%. Right into April. Look at that. We'll see if we can drop down below here now and start getting into this bigger box. I'd like to see this at least down in here, and then catch that for a 10% return on your money for Disney. I want to see this just take out this low here and then come back and use this bull trap to go higher. This is the pre-market. It's already above that high. So if this now runs straight up here, comes back down into this, I'd like to see that run up higher. Looking at the next bull trap above you here. That would have to get up. I'd have to take out these highs to make 10% on that. There's Roku again for you. Remember this little level we had marked out here? Look at that. Body traded above it. While I was in England, you see that above it, comes back into it 3 weeks ago, and then tags it and quickly leaves. And you get 97. There's 20% return on your money there in 1 week. 20% return. Now you're looking for a retest here, and then send that higher. You want to see this stay open here. Now this would be that graded, not so much of a graded response because we did not create a fair value gap above the high, but the fact that we got a fair value gap below it may mean that we're going to push a little deeper into this. So I'd want to see no more than that, you know, a C-level trade in this to see that go higher. But ideally, I want to see this institutional order flow entry deal here now. Start sending that higher. So go down into the lower time frames and look for an opportunity to see a reversal here. In Roku, Roku to see if that goes higher. I got one more minute before we get started. I'm looking for Archer to get into this area here. I can see that dip into here one more time. Then I'd be looking for a buy in Archer Aviation. Look at all these guys opening up high. And down she comes. So that premium hourly held right on the money. 8:30 held, and we're on a run. We're on a run down. All right. It's been a long time since yesterday closed. Yep. There's the retest of this. We had a body close below it. Retest it. Continuation. So that's a model 4 entry right there. We're right back to the midnight open. Big run down into a discount. So looking at 289, 298 to 234. Or 334. Yeah, 334. Let's dig deeper into this midnight open range. This is a midnight open, first fair value gap at the midnight open. Retest the midnight candle and see if that comes lower now. Hourly is already tagged, already hitting that first discount SIBI. Inside this larger range, where are we at here? Not quite 50% yet. Right here is 50% at 36. So bottom of the 6 a.m. candle is the midpoint of that little range we just entered in on the hourly. This huge range here. Now we're through 50% of it. That's good. Institutional order flow entry drill. Targeting that 339 to 295 level. 339 will be right here. $39 is right here. There's the midpoint of the midnight open with the consequent encroachment. Tell me that's not a data point. Look at it, just tag it perfectly, and we get a little reaction off of it. Let's see if we use the 6 a.m. to come lower again. Didn't quite use the 6 a.m. Gone lower. Watch for that 339. We've hit 339. Now I'm looking for all the way down into 297. So it's kind of like the box you're looking for right here. So now we can look at, you can look at this right here. If this is the box, if we just hit that discount box, we're through the 50% of the range. Now we want to watch for a reversal in this area. So now we've hit our discount box right here. Now I want to see if we see a reversal here. 324, would like to see a reversal pattern at 324. Look at that, 322. You're right on the money there, Hadi. Good work. Wait for this to close. It's not closing above here, so wait. And there's your first candle to the left. You want to find some support at that if you want to push higher. So if you're just running in between this range here, you've got to get in on your discount portion of that range or that inversion when it inverts. Right now it's just a fair value gap that's been reclaimed a couple of times, and now we're going lower. So watch the rest of this box, and then this box, the moment we break it on the downside, I'm looking for the midpoint of this candle here next at 269. And if I lose that, I'm looking for this right here, this next level. We still have lots of the range to hit yet, Hadi. Just remember, if this was a box-to-box trade, if this up here, we're looking at this box here, is there a reversal on a 1 minute here? I'd like to have seen this wick up in here and tag that. That would have been a nice box-to-box trade inside this large range here. So that's the downside objective. We've hit the top of it now. So we're deep into our first D1, and then D2 is down here. Then I'd like to see a reversal, especially off of here. And the consequent encroachment of this would be like a maze. If I go here and I put that one right there, that's the next box below us. And right there, I want to see it go bink, tap it, and then start to see a reversal off of that. So watch this. If we run through here, come back, find support at that. I'm looking for that midpoint, which is about here. We did not get a close above that level. We had a couple of wicks up in there, right into the 6 a.m. again. We wanted to see the 6 a.m. get tagged to go lower. It finally did, came back 3 candles later, finally tagged it right at the consequent encroachment, and now we're going lower. I just think it wants to reach for this discount box here now. Now, if we reach through that, then you should really see it accelerate. If we see this close out of here, we should really see this like another big rapid descension all the way down. Like we should see it really pick up speed here now. If it just dives into this level and then you see it quickly start snapping out of that, we start to see a really violent wick coming out of here. That's the bottom of the midnight range, open range. Remember I said if it dropped below it, come back, tag it, send it lower. That's the no-go zone now, right? It dropped below it. There's your entry for continuation. As soon as it touches that candle's low, pay yourself. And keep in mind the other higher time frame data points, which is the midnight open range, revisited right to the tick. If we start popping back through here, we get a small little imbalance right here, which we've just come back and filled. Keep coming lower now. But this whole no-go zone is fair game to come back, revisit it, and go lower. So if you're in here, you've got to get paid right there. Otherwise, that's a huge drop just to get that little piece of the pie. Look at that, just bouncing right off that midnight open range low. Now, 15-minute. Watch here. Got to see how we've closed above it already. Now we got to change in direction. So before it runs you out, you got to, if you're in a Model 3 here, that's your Model 3 reversal right there. Change in direction, tap you. If it trades back through it, wait. You've got the lion's share of that run down. If you're in on a short here, then you want to, the first SIBI that you see get broken to the upside, which is right here, just come back, retested it. Now we're going higher. So that's where you would have got out right there. And look at this. This is what's happening, is this change in direction right at the bottom of an area that you go, there's a suspect reversal that can happen here, right? And we've come back into what? The midpoint of this candle. See that? And now we're getting this big reaction off of it. So it did not get through here for a quick acceleration. We just came down nice and deep into the breaker here that takes out this low. And now I want to see if we've come back and retested this top of our no-go zone. So now we're watching to see if this gets broken. And because it's so close to this guy, I'd wait for it to come back through, tag it, just to give you a confirmation that we want to go higher. And then you're watching its mean threshold. As soon as you get a body above that, its mean threshold must hold, because we've worked the SIBI. We've worked the SIBI. They've both been worked now, so there's no reason for it to come back down into that area, except for this BISI, which I don't look at this side, I look at this side. So watch to see the bodies here. We've already had our indication that we're turning. This is the bull trap. If you're looking at this little range here, you would have bought at a discount, sold at a premium, first level here, then the rejection block, and then see if you can push for higher prices. So this one here, see how we went up above this level? We came down, traded into it. We came into it one more time, and now we're pushing higher. So right now we're getting an indication to go higher, and we've broken through the no-go zone. So it's no-go here, but it's a go here for a continuation. So when that gets broken to the upside, it's used as support to go higher. You're sitting right in a breaker, so wait. Wait for this to get broken, and then continue pushing in that direction. Yeah, D, are you doing a 15-second? Oh yeah, beautiful. Nice, beautiful run there, the D. Good catch, buddy. This is a run above, then a run below. So you wait for market structure shift. For here, body breaks through that. You come back, you tag it, you run up to the premium. So one candle, 15 seconds. You got yourself a small little pay. We're waiting for a body to break the high. They're not breaking the high just yet, so this could be a consolidation. Little tiny, well, those look pretty close. Wait for this to break. Use that as support. Come back down into this range. Look for this target's mean threshold. So you got, what is the high in this candle? 3,000. What's the long close on that? Nice tag. It is. There is a little tiny one in there. Right there, you see it? Anyway, that's 15-second chart. So we're back through here. Looking, you're targeting here and here. And as soon as we get back through this no-go zone, you're looking for a continuation on the downside for the next box. Look at that box there. Box to box. Then you didn't get a second box here. Unless you looked at this. No, you wouldn't have it. That's 15 seconds. Let's get up to the 1 minute again. So the bull trap held. We did not break that to the upside. That's why I say you got to wait. If they're that close, you got to wait for this to get broken as well. So you see how we're starting to consolidate. You got to wait. Wait for something clean to break out of here. Or break out of here. Nice play, Hadi. Nice quick little run there, man. Nice discipline. If you keep the discipline on that trade right there, and then you pay yourself at the premium or rejection block, that's quick 15-second discipline, man. That's a quick snipe in and out. Now, some people watching may go, that's ridiculous. Nobody wants to trade that. But if that's your thing, your adrenaline rush, and you enjoy that kind of thing, and you see it and it's clean enough for you, and you trust your trade, you trust your analysis, of the algorithm right in a 15-second chart. How many people trade the NASDAQ on a 15-second chart and nibble profits at perfect levels? Hadi does. And does it pay him? Jingle, jingle goes his pockets. Oh, you don't hear any jingling because of all the big wads of cash in there. You deserve it, Hadi. You're a good example of disciplined trader. A disciplined trader. And you got to follow the rules, man. Whatever your rules are, you got to stick to them. And Hadi is following the rules. I lay the rules out every day for you guys. Piece by piece, you'll get it. If you tune in enough times, you'll get the rules. And it's not about copying my trades. It's about looking at what I'm looking at the analysis, hear my analysis. You can agree or disagree. You're going to see it on a 1-minute chart. We've been doing our show now for 3 years. And there's no way I'm going to survive 3 years doing this work on a 1-minute chart if you're not seeing some accuracy in what we're talking about here. And I give you some freaking crazy accuracy. So develop your rules, develop your analysis of the markets and your clear understanding of what's going on with the markets, and then develop a trade model. I give you 4. And if you look at the CAM model, there's another 3. So there's 7. And ICT gives you a ton of them. And some of the CAM models are actually ICT models. So, and my model 2 is the same as an ICT. I think it's 2022 model. So I'm in a short in gold, and I'm going to move to break even. I'm in profit in gold because gold just gave me a nice little entry for a short, and I took it after I recognized, like, oh, that's already moving in my direction. Let me show it to you here. So this is the breaker I want to see get taken to the downside on a close, come back, retest it, and then go lower. So I was like, ooh, that's a definite short there. So I caught it a little late, but I'm just going to sit here in some profit. So it's a risk-free trade now. I'll let it go and see if we start chopping through this stuff. Really aggressively drop down here now. So that's gold. That's a model. This is a model for continuation. That's what I'm looking at here. We have an extension, then a retest, continuation. That's a model for continuation. I'd like to see this. Now that we've got this, this is our downward box, next box down. I'd like to see that come back right into here. Right there to start to here. 313. Looking for a 1-minute chart if close above the 4946. Just watch this discount box down here. This is the key level for a 15-minute chart here. That's the key level for me on that huge leg up. There it comes. Boop. You've just tapped it now. That's the edge of it. Now I want to see they got reaction off of here, reaction off of here, or if we just blow through that and close below the consequent encroachment of this, it gives me a feeling, a warm fuzzy feeling that we might be running for these lows next. But there's the tag right there off the box. So watch here, and then yesterday's 8:30, and then we also have a 6 a.m. candle from the previous day. Our buddy Abs provided that for us. Another ICT observation that was very seldom talked about. He found that a long time ago. Bless Abs. He was an awesome guy. He still is an awesome guy. He's just doesn't come to our show much anymore. But he provided this for us, the 6 a.m. candle. If you look at the observations of the 6 a.m. candle and how important it is, 6 to 6, it's almost like Marky Mark's Mark III. So we're into the bottom. We're now tagging yesterday's 8:30. Right into that SIBI now. Now I want to see it just explode through here. If it gets through this, I want to see it super accelerate now. Like it's a major speed. 2745, 2745 on the 3-minute chart. If closed below that, I will go short. 2745. It's got to get below here for me, Hadi. 2475. You see it close below that 232, yesterday's 8:30 open, and see if we can't come back and retest this and send it very quickly lower. Come on, gold, run. I only have one on. I should have put 3 on. If I put 3 on, I could have taken 1 off right now in gold. I only have 1 on there, so that would have been a nice little low to take. There's a discount box down here. I'm sorry, where are we? Where the heck is our price? Oh, it's over here. As soon as it takes that low, pay yourself. 1,000 little ducats in the pocket. So now we could see this pop below here, and this is a whole no-go zone. And this consolidation, I want to see it really accelerate now. It's got some freedom. Get on the other side of this, close below here, come back and tag that and book her down. See how we've got this lots of open candles here on the 15-minute. It's a zero stress trade, so we'll just leave it alone, let it do its thing. We've traded below that now. Let's try a sell short. What do we do here? You almost have to put it right there. That's 12 grand. I'm not going to give up 12 grand for that. So we're going to keep it tight. I'll hold that right off there. That's it. I don't want to see that come any higher than that now. That's not good. Not good. We could still revisit that. I gotta give it that. I gotta give it a revisit of this low here. There's no, there is a little tiny. Remember I was saying I wanted to see it come back up into this area here. That's still a potential run. And then roll over. It'll be a deep run back in here. Yeah, I don't like that. Yeah, I'm going to take the loss on that. That pops through here again. We're above this consequent encroachment. Yeah, I'm through. It's supposed to take me out by now. Watch this area up here. I didn't want to leave a risk of it coming through all this. Take this little bull trap out and then drop me quite a lot. So I'm going to wait on this one. These little wicks. See, I've got the first Sibby here and that little bull trap. Not a very clean, clear type of a setup. It's a full fill of our discount box here. But it's, yeah, it did pop through here. So I'm looking right here right now. From here to here. I'm out of my gold trade. There's the dive in. It's right on a 2 candle. So we'll see if it rolls over here. See if it rolls here now and starts to come lower. And that 2 candle holds. And that was, I wasn't willing to see $12,000 or risk that in case it just continued through it and then took me out higher. And that's what percentage of this run? 70% option trade entry reversal on a 2 candle inside a zone. Got 3 confluence points there, so we'll see if that holds. Use the larger range. Oops. Use the larger range. 62% right on the button. If this goes higher, then we're going higher. There's a retest of this candle here, but it's not, it is the first on a swing, the first candle to the left. Watch the midpoint of that. That's your line in the sand. So 1, 2, 3, and then 4. So you have this big long wick. Divide that into, typically you divide it into quarters. I like half. So open, half, close, and the midpoint or mean threshold of that little candle. This has to break here and come lower if you want that to continue going lower. If we want to see this go higher, we got to wait for this whole X section here to get broken to the upside. That'll put you right back up here. And the 5 minute, there's a 5 minute right there. And then your regular trading hour gap goes all the way back up into here. If we're going to continue to push through and fill out the rest of the trading hour gap, you got to trade through this 5 minute here and start heading lower. It's got to close 247. So the 2 minute candle's holding. Retest this, send it lower. I'm going to go short on that now. One more time. Move my stop loss to break even, plus the cost of the trade. I want this to hold. With precision, you want to see that hold right there. I don't want to see it whip through it. Oh, that's right on there too. Let me just put that right above that spot right there. That's really close. I'm literally sitting on, I'm relying on that spread to keep me out there. There's that little premium. We've now traded into it again, and I want to see it come lower. So I'm literally saying that's that high right there on that candle, that 40 or number 7 candle is what I want to see. So number 7 has to hold me for price. So now I'm going to sit right here. I'm just going to follow each candle down now. That makes back the loss. I'm going to take my money out. That's the loss that I took going back up. So I've recouped that. Now get reset and wait for a new setup. So that gets me back the loss that it took. Sometimes you just got to kind of, in order to get your mindset, for me, I know I have to, if I keep focusing on the loss that I just took, then once that's back and you say, all right, now I can just reset and get myself back in alignment with my trade setup. And the fact that it's tearing off here, I know how my mindset is. So watch for a retest here. And now you can go for a short there. We'll do it a little slower this time. I'm going to sell short there. It was nice. It was a nice setup there, Hadi, right off that premium. And if you went right to the bottom, good for you. There's the retest of the no-go zone again. $8.30. This is a 9 candle, so we should see a 10 come up in here. As soon as that stops, you should see a 10 pop into here. There you go. There's a 10. Now I want to see it come lower. Drive it down now. Now my candle will sit on the top of the 10. Pay myself at the rejection block or low, because this is a model 4 now. I want to see this range extension. Buy one there. Pay yourself at that low, and then move to break even, which is like right there. So I don't want to, it's like right on that mean threshold. So I don't want to see that mean threshold come back and get tagged. It was just right on my entry. Come on, you gotta see, I want to see it explode here. Not up. I see it explode down. There's the mean threshold. That's right touching my thing now. So now I have to literally drop it right on top of my entry and say, that's it. You've already tagged your mean threshold. You're done. I won't let you come back. If you do, you take me out. So I'm relying on that data point to hold and go. If it doesn't, well, there you go. I'm out. You nibble a little bit of profit out of that rejection block, right? If that turns and takes off now, hopefully that reinforces to you guys your mean threshold. You got to pay, you got to support your mean threshold, see? Or your rejection block. You've got to pay yourself at rejection blocks. And we did do one little tick below that low. Now we're back inside the no-go zone again. So look at all the areas of confluence that we have there. We have a 15-minute chart discount box. We have the rejection block on the discount. We have a 6 a.m. from yesterday. We have the 8:30 from yesterday. We have a no-go zone on the lower time frames here. They're all kind of key level in it here, and the bottom of the regular trading hour gap, or sorry, the midnight open range. So now I'm going to wait for something clean. Don't rush this. So we made back what we lost, nibbled a couple extra bucks out of that, demanded price action. If it broke us, then we're out. So now we're looking for a cleaner setup. So I'd like to see this break above this level here, find some support at this, and then start to clear out this big ass breaker here. So that's the next key level for me above here would be here. And we're going to call that the premium array. And let me get this out of here. So now we've got a low taken, a SIBI, this breaker, or this bull trap right here, and the bull trap sitting right inside the premium level, inside the smaller range here. The premium level's been tagged, but the bull trap has not been broken to the upside. So this now becomes the target for continuation. So from its open, or sorry, it's open here to its close right here, it's all fair game. So you've already tagged it right there. There you go. We're in it now. You can put one long, and you don't want to see it break this candle's low at 8:30. 8:30 is the bottom of the, well, almost the bottom. 6 a.m. is the bottom of the SIBI here. So if you scale in, you can put another one in the midpoint right there, and one more. See if this works. Right there, right at the bottom there. Stop loss will have to sit right down here. And you don't, this is what I don't want to see. See how it's just starting to work its way through here? But we're inside a bit, this little bissy, so you want to give it some wiggle room. That's it right there. So now my stop loss goes to here. It's done its little tippy tappy. If it runs through there, then it looks like it's going to run lower. So for me, it's touched that data point. I don't want to see it come back and tag it again. Otherwise, it's going lower. So you paid for some new information. Watch it go lower. Now we're looking for a drive down, and I want to see it really accelerate here. So freeze up for a second. Don't go too fast too soon. Give me an opportunity to get in on the short here. Now it's going to accelerate. Now on this time frame, the 15-minute, we see it close below that level. This becomes the no-go zone. So this now becomes the retrace level to go lower on the 15-minute chart. And all this before, I just made the mistake of telling you this, and I'm going to kind of correct it for you here. We looked at this as a no-go zone on a 15-minute. Using it on a 1-minute chart, you see how we say, oh, that's failing. The no-go zone doesn't work. It's because we're using it on a 15-minute chart, and it has not broken the no-go zone on a 15-minute chart. We thought just because it's breaking it on a 1-minute chart means it's broken. No, that's just a wick. A body must break it. So you have to use the no-go zone on the time frame that you're actually using, or actually you find it on. So I'm finding it here. So I got to wait for a 15-minute one. 12 minutes from now, that has to close below there. And we should see a nice big wick back up into here. Use that as a support level to come lower. And if we have a model 4 and this closes down here, you've got 1, 2, 3, 4, 5, 6. You got all those 6 different levels for a continuation on the downside. Unfortunately, we may see just a quick rip through here. Remember we were talking about we wanted to see it go faster? This is the acceleration. So you can start loading on one there. That's the institutional order flow entry drill. You can load another one on up there at the low. All the way back into, wait and see if this 11 o'clock trades. So I'm using the lower time frame now because I have not got confirmation on the higher time frame yet. And I don't want to see it get back through here. There's another one there. Now I'm kind of counting on it to do I know Hadi wants to see this go higher. I want to see it go lower now. I want to see this model 4 continue on the downside and continue through here. And that's the premium up here. I don't want to see get broken. And that starts from here to here. My stop loss has to stay right there. Another one there. We're above this level here already, so I'm giving this the wiggle room it needs to go lower. Changes for me if we start to trade through this on a close. Then I'm going to rely on trying to get a refund on my entry if we close above here. This is the refund I'm looking for. We've traded above that, so I'm just staying right at the open now. If it takes me out, I just want to see it come back and give me my discount. We've got a change in direction here, so that was the discount. I would like to see it refund on my money, on my entry. It could still go lower. It's just I'm stuck between going higher and going lower now. So I have to wait for this market structure to shift to the upside, even though this is showing you that there's a high likelihood we're going higher. I have to see the premium break, and then we're back in sync with what Hadi was looking at here. The lows have been run out. You see this change in direction. You can't fight against what's showing you a change in direction on you, right? So looking for that refund. Didn't quite give me the full refund. So now we're looking for that market structure to shift. Midpoint here is holding. So now a model 3 would be a return back into here. If I lose this time, that'll be my last trade. Out, small gain, done for the AM session. Good for you, Hadid. Good for you. Know when to quit, man. If it takes this high here, I'll move my stop loss to break even. You can take a portion out there. See you around 1 p.m. Thank you, Darren, for everything. You're very welcome, sir. Have a great day. See you on Telegram. What's that down there? I'm going to put that just below that little tiny guy there. That's not a good sign. We're below this level now. This is refund time. There's a little tiny imbalance down here, which I don't think is going to hold me. We've traded below that level. This is where you're looking for a refund, because now this becomes a no-go zone. So you got to go here and say, that's the loss you got to take. So unless we start trading back through here again, got to hold your price. There you go. Swing. Let's see if that closes below here or above here. That's my saving point. It's above it. Come back, retest it. Crazy Ivan. Here's the Crazy Ivan. Hopefully he sees us and comes back and takes us out there. Oh. So now I've got my rebate all the way up to almost touching my entry, and I have to sit just below the next one. There, I'm out. So there's the rebate. So I've now, because it's also choppy, I'm going to wait. If it takes off here, that's fine. I'm going to wait for a market structure shift. This was just that drop below there. See, you get your rebate, and look at this now. Maybe a couple of $1,000 back down in the hole again, right? So we're locked out. Got our rebate trade. We got $30 out of that. So anyway, there's a full run back into the discount box again. And then I want to see that go higher now, but that's too consolidated for me. And yeah, I'm going to wait for something cleaner now. So you get to see your luck out when you get your rebate. There's a retest. That's a nice little retest right there. Now I'm going to see the same thing happening up here. Now for the 5 minute, you want to see this 5 minute level right here. Pop through that, come back, find some support at this, and then start running higher. Literally closed, open on it, closed on it. No, just actually slightly below it. Watch through here. Watch for a retest here. And then send it higher. So you got 1, 2, 3 levels right here. There's the midpoint. Off the 830, we're going to buy one there. That's been used, so I don't want to see any more than that. Change in direction, change in direction. Nope. I'm only playing with one here because this is so freaking choppy right now. Got to change in direction, change in direction. Got 2 times exchange direction. So you got this discount box to box here. There's no box unless there's a 15-second reversal there. So this now becomes the no-go if we go through that, and you're back into the larger range and its discount box. So there's that discount box hit, and we've already wicked through it. So not very super clean action, right? You want to see these things tag and go right on a 32. Crazy Ivan. Remember I was telling you about the 2 candle? And its complementary one at 32. There's the 32. Look at that. It's 16, 17 turn. The 32, 32 candle, 27 candle. There's the 27 candle. The dot's there, but it should be down here. So there's the 30s, 27, 32. This is stuff I did years ago. Years ago, I figured this shit out. And it's still working. It's still working. And this happens. And if you go to my time in a bottle video, you'll see how this works all the way into months and years. And I'm showing you on a 1 minute chart here. Because if it's algorithmic, like I've showed you, all this stuff is algorithmic across, and Michael's taught us that it's algorithmic across all time frames, all asset classes, anything that's run on the in the markets that produces candles, that's tradable, is on the algorithm, and the algorithm runs it. And this is how precise it can be when you're looking at specific data points, which I'm clearly ignoring because I'm looking at something totally different. I should just focus on this time in a bottle reversal. Yes, wait for a reverse into here. 38 to 40, retest this zone here, and then go lower. If it's just swung in here and taken up, watch that last little piece. Remember I was worried about it over here? Watch this. 37, 38, maybe this swing here. There it is. Finally tagged. Look at the reaction off of that. Now we'll see if that 38 starts to send it up the other way. Here's 38. Send it back. Now if 38 pauses here and 40, 42 starts to make their way down here, just kind of watch for these turning points. If 40 takes out 38, then look for 40, 42. Or 39 takes out 38 here. On the upside, look for 40, 42 to run into here. Yeah, it's very messy. As you can see, if you don't follow the rules, and the rule was as soon as it breaks this on the downside, I should close out, but I held that way too long, took another loss there. So got to follow your own rules, man. There's 38 on making the high. That dot should be there. Now 40, 42 make a low. And what did that bounce off? 6 a.m. candle right on the bottom. Crazy Ivan sees you. He's coming for you. So before it takes that low, I want to see 40 come back into here. And just give this a little tap. Oh, that's right there. Good enough. Easy. inside this no-go zone. Now we've traded below it. See, now I want to see if this gets traded into and start going lower now. So again, your no-go zone is going to be right here. That whole box right there, it's open to its close. And you want to see something that's really aggressive, it has to come down below it. Just tap it and go. This whole run up in here, 40. Now you want to see 40. No, 41 clears that out. Then we're looking for a run up into 42 up here. 42, 44, 45. Welcome to Chopsville. Crazy Ivan's done his thing. That's the look back, the Crazy Ivan. Came back, took you out. We have a body closing right on that high. Body respects this, send it higher. I like to see that go higher from there. Stop loss has to go one tick below this. And we'll take profit right there. Takes the high, move to break even, plus the cost of the trade. Oh, it hit me, but didn't take me out. Come on, pop through. I'll take that there. Now I'm just going to wait for this premium to get broken to the upside, then do a model 3. That's the premium level hit there. So if that just rejects off that mean threshold, that consequent encroachment, I should say, of that candle or that premium box, and we get a retracement all the way down again back inside the consolidation. Not really what I'm interested in. There's the full fill. Now we're going to wait for a body to break above here and then use this as support to run for the next level. Then start targeting up here at 279. Mean threshold. It's on a 45 candle. So I want to see that stop. Don't take out the high just yet, or the rejection block. I want to see that just hold there, just above here. Come back, tag this all the way down into here. All this is fair game, and then send it higher. Then start targeting these equal highs. 10 seconds. Stay up, just up here. There's the rejection block done. There, good. Now, before you tag that, come back and give me an opportunity to get in before you run the highs. Well, we're looking for one little opportunity to get in here. So if that remains, the highs remain, and it comes back in, look for your entry here. If the body breaks that high on a close, look for this candle as support to go higher. We've hit the next premium array already, and there's one more right up here at 294. Hits that. Now this is the, you want to see a fair value gap form up here now above these highs. Just a small little candle bouncing back and forth. If it really has got power to rip through here, again, we want to see this close here in the next 2 minutes. And that 5-minute fair value gap, you want to see it used as support to go higher. So then you want looking for a graded response above here. If this candle just stays bouncing around here for 30 some odd seconds, it becomes the new fair value gap. And then we're looking for institutional order flow entry drill for an A level trade. And remember I was telling you before about these, if this is our midpoint, look at this. Unless it tags that right away now, our midpoint is from here to here. 50% puts right on the bottom of that new or midnight open range. There, see how it's a small one? That's a fair value gap. Now I want to see this just tap this guy here before running the highs. And if it does, if it takes the highs, then that's the A plus already left. It took out this high. I want to see it come back down into here. And remember, now that we've got these highs taken, this now becomes the, you buy one, so that was a little late. There's an A level entry, you buy that. And then I'm looking for all of this into here. Stop loss will sit right down here. One tick below that low. So you're going to watch for 11 o'clock now here too. Here's the next macro beginning. If this becomes the reversal, you're given this until this mean threshold right here. There's the retest of that level we looked at, the 50%. just tagged it perfectly. And now we're looking for, and that's a 50 candle. Right off that data point, we're looking for that 50% of that little BISI I talked about. That's a B level trade. No, I don't want to see it break my thing, so we'll put that as a break even trade. I don't want 50 to create this swing point as it goes lower. So that's it. Too much chop for me. This is when it's going to take off now, just to piss me off. 50 makes the swing, also makes the high. It's a swing high and a swing low. So 50, 52. This candle may waffle. 52. If a 52 pops down here, I'm okay with that. If 52 makes that high there, if 51 takes that out and then 52 keeps pushing higher, then that's good. I'm looking for 55, 58 to get back up into this premium array again. Look at that. Way too picky with my trailing stop loss. That would be a nice little run there. And look, we haven't seen it yet. It did not break above the 5 minute on a close. It still stayed inside it. It did break up above the swing point, came back, tagged the swing point, went higher. Not that that's a clean entry, but there's a nice A and B level entry. Continuation, takes out the high, pay yourself. This one here, that's a buy. Again, another graded response above here. This I'm kind of hoping is the A level and just keeps going. That holds price tight there and send it higher. And I'll take another one down here. If we get there, and then I'll put my stop loss right below there. So if it takes out that high, technically you pay yourself and move your stop loss to break even. Right there. I'll let the rest run now. There's a little tiny, the 345. There you go. Again, next data points right here at 351. There's 3, 5, 1 right there. Now I'm gonna have to move my stop loss into this base here. Good. There's another rejection block. You pay yourself there. If you've got peace on, take it off. I'm just gonna trace these candles up here. So another method is just kind of each candle that creates a low. That's where you're gonna kind of leave your stop loss there. Next one, next one, next one. If I only got one on there and I'm really tight into the trade anyway, so if it takes that high, pay yourself. We'll skip this one here. So it's like a risk-free trade now off of this continuation model inside the range to grab the last piece out of it. Now you want to see this mean threshold hold price and then send it higher. If it starts to eat through that, we can come right to here, which is 345. And then just keep going higher. And then we're looking for, on our higher time frame, I'm looking for a run to 433 to 438. I'm below the mean threshold of that candle, and I'm just on the next low here. So you're just kind of chasing it up one candle. When you're this high into the premium and you're just buying this, we've already hit our objective here. So now you get it's run out the high, so that's technically where you'd pay yourself. I've only got one on here now, so I'm going to use the each trailing candle method, or we could do a take profit model 3. Let's do a take profit model 3 instead. I'll do a take profit model 3. So basically we're looking for the first BISI that forms here. And in this case, there's no BISI in here. So I'm just going to trace it behind this order block. I want to see that act like a propulsion candle now and propel price higher. So key 1, key 2, and just send it up. It's also, what is that one? 6 a.m. candle. Today's 6 a.m. candle. I want to see that hold price now, like pop through here, 6 a.m. candle, hold us, and then send it up through that first fair value gap, targeting the midnight open again. Look at that right precision to that 6 a.m. candle data point. Eat, eat, eat. Then come back and use the bottom end of it as support to reach for that midnight open first presentation. Now I want to see this candle act as support. Now get above that. There you go. Now I'm going to use this as the support candle. You want to see it close above there. not wick all the way through here. It's digging into that first presentation fair value gap. Now I want to see that area here especially used as support along with the midnight open candle, or that midnight open data point as support. You can wiggle through that, come back up, find support, and keep pushing higher. And we're looking for the P1, P2. So let's see if there was a model 4 in there. See how we break above here. Body breaks up, come back, find support at that. That's a model 4 continuation. We got in off the older one down here, right there. And now we're looking for this to run all through here. And we're looking for a run up to, even that fill in would be nice. That'll put us right in there. So a fill of this SIBI here, or even retesting 830s open again, would be so cool. So here's our first BISI right here. So we're going to use a Model 3. So I want that to stay open now. Like 7 seconds. That's our BISI. So if we see this BISI close below, our take profit Model 3 is over. It's got to close below here. My stop loss now is sitting below this because this would be like a mini market structure. It's not a market structure break, but it's this propulsion candle. This one, we wanted to see it propel price higher. It did. And this creates a new one. We want to see price come back. Just tag this and send it higher or leave it open and keep pushing. Remember, we want to see this area here act as support. Once this is broken, you can come back and find support at that first open and go higher. This would be a institutional order flow entry drill if it just tags it on an O2 candle. There's the fill. So watch your 8 seconds. I got 1, 2, 3, 4 data points, and I'm going to sit my ass just below the bottom one. That's the fill. It did not break our BISI, so as soon as this candle, now my stop loss will go right here, because I don't want to see this now get revisited again. So that mean threshold there, if that holds price and drives this back down, then it's going to bounce between that one, and I'm out. So I'm not interested here. So you watch to see if this closes here now. The rule is wait for it to close below there, but I didn't want to see it come down there again. So we'll see if it closes, then that trade, that long trade, is off there. 8 seconds. One, done. What's the high of that candle? 76. The close of this candle is 75.25. So it's 0.25 below that. So we'd be out there anyway, and it's coming back to squeeze this mean threshold. So we're between this one and this one. That one's mean threshold, this one's mean threshold. That's a battle that's going on right now. That's how I'd look at it anyway. There's the mean threshold. Now I want to see that go higher, and you want to see this hold. If this breaks below here, then we've got a change in direction. A retest, send it lower. So there's that mean threshold. Next one is this one. And you want to see it climb through here and use this as support to go higher. So this little level here now, in order to get back in sync with this going higher, it has to break through here on the way up. Half this wick, hold, send it up. doing it. We've got a change in direction. Full refill of this BISI. Now I want to see if this mean threshold gives way. So far, it's getting a couple of bounces off of it. Look at that, right off a weekly, new week opening gap. New week opening up. There's two of them in there. It's bounced off that one. I wonder if we're going to get all the way back down into, oh, that'd be a bold move. Okay, so we've got here, look at this level right here. At 351, 345, and 318. Change in direction, supported, pushing lower, mean threshold giving way. We've just swept that. Wait for this to get cleared out here, and I'd like to see this hold price and send it lower. So there's your change. There's your Model 3 reversal. Now, if you're super bold, you take a Model 3 as a new entry Model 1 with a stop loss sitting above the high and let it run. And as soon as it takes out that low, you pay yourself, move to break even, and now you're in a risk-free trade. And this is a 7 candle. You want that to stay right there. The next one to come up to halfway and send it lower. Let that 7 dot sit right there. Don't break the 8 candle. Shouldn't break that high. You want to see 8, 9, 10 start to send this lower. The 1 minute of the week is there as well. There's the new week opening gap right there. Yeah. So now we've broken this. Wait for 8 and 9, 10 to create the swing right in this area here. Because 8 takes that, then look for higher. It did. I like to see a 9 just swing into here and take this again. A good eye there, 33 owls. I like it. So to get back in sync, you want to see this area right here. Eight, 9. Nine's making a swing point here. Could just keep running. So 9, 10, I'm looking for a 9, 10 turn, and then you got these squabblers. So this could bounce around inside here now. There's the midnight open hit. So as soon as you see a body break this high, retest it right here. Now you want to see that go higher, all the way down to the midpoint of this. Slow one on along there. I'll put another one on along here. The stop loss will go one tick below that low. If it takes the high, you move to break even. Right there. So it's a zero stress trade. Exit that one. Oops. Right there. Let it run. Now I want to see this hold price. It took the high out, so I've only got one on there, so otherwise you take a piece off there. It's probably going to come back and take me out, yeah. So there's the 910. Oh, that's 11. There's the squabblers going on here now. Let's see if we can get something back to here. Right there. Let's buy one there. That's right on the mean threshold. You've got this and this BISI down here one more time, so you got to put it just below the BISI. And this breaker that takes out this high, you want that breaker to hold price. And this little swing you get right here with the first candle to the left, you can retest that right there. Midpoint right there, and the full fill right there. Stop loss is now going to come up to here. I don't want to see it run back down there. This will be it for me now. If this this is 1107, 1112, so we could get a run through here now. This could be an active run on the low. That's got a hold price there now, right on the midpoint. So I'm going to stick that right there. That's the midpoint. 11 o'clock. This probably going to give way now, and we're probably going to get a run back through here. Watch for this. This will be, I like to see a displacement through here. That little fucker, if he leaves now, just because I put my stop there, so that, oh, we'll come back and take you out, and now we'll go higher. We're already through this level, so I think this is coming back down below here. Just hit that midnight open. It's way up in that premium. No, it's still got more to go. There's still more to go up there. Yeah, we're above here now. Tag. That's another buy. Should have left that alone. Now I have to put that down here. And the take profit will be right here, which is right at the bottom of that breaker there. Watch this right here. Got a hold. And it's right on a 16-17 candle. So it's a swing point here inside this candle. 16 should hold. 17, 18, I want to see start going higher now. If we see 16 and then 17 start to cut below this, then I'm on the wrong side of it again. '17 tends to go in the opposite direction to 16, and they tend to battle for who wants to make the low. And the low would be just below that 16 candle right there. It says, I want the low right off that candle there. Send it higher. There you go. Now I don't want 17's low to get taken out. So 16, 17 made the low. 18 tends to come back against 17. And then 19 tends to go from there. Then you got 20, 21 making a high. And I hope 21 makes the high into here. I don't like that at all. 18 is going to come back against 17. I'm out. That's too choppy for me. I was hoping that we just keep pushing higher. That we're in that pre-lunch starting shenanigans. So 18 tends to come back against 17. And then 19 turns against that. If 19 continues, then look for 21 to make a new low. So this is why I call them the squabblers. They like to go back and forth. I think that's going to be it for me, you guys. Until I find something cleaner. Yeah, see, 18 goes against 17. 19 takes out the low. 19 wants to be the new low. So you can have 20, 21 up here or 20, 21 down here. So one of them's, you got to wait for one of them to make a break. Now 27 tends to make the a bigger move. So you got 21 all the way to 27. We should see a nice run between those few minutes. But other than that, I think that's going to be it for me. So 450 and 440, there's still a 15-minute fair value gap. 440 and 450. Yeah. Right up in here. Agreed. That's what I wanted to see. This just get tagged right in here. That breaker. I want to see it right at the bottom of it, which will put you right in the bottom of your premium BISI. But it wasn't giving us that as a final push. It did hit the midnight open, so now we're kind of bouncing off of. We said we wanted to see it come up to midnight open, come back, use this as support to drive it right through. Look at the bodies. They're totally respecting that first presentation fair value gap at midnight. And now they're staying above the consequent encroachment of it. And now you want to see that keep pushing higher. All the time they're staying above that consequent encroachment. I like that. But I want to see a body break above here now and use that midnight open as support to keep pushing for this premium level up here and here. Let's quickly just roll through these. Dow Jones says it wants to go down. You don't want to see this get broken on Dow Jones. I want to see that roll over now and start tracking down in Dow. Yep. Man, you got to be tight on your rules on that, boy. You got to be super tight on your rules. If you don't follow rules to the letter in this on a 5-minute chart, it turned back against you. So as soon as these highs are cleared, you got to pay yourself, or at the very least at the rejection block. Comes inside, trade through, find support, change in direction, trade into it, go short, targeting. There's one right here. You hit it. Now you wait for a break in structure. Breaks structure, comes back into it, sends it lower, pay yourself at the lows, change in direction, pay yourself at the high, change in direction, enter, go short, pay yourself at rejection block, trade back through this, right here, enter here, pay yourself there, and now you're risk-free. Now you got to follow the rules, super tight rules. I mean, gold. Looking for this breaker to continue to hold price. We've come back into it multiple times, so I'm looking for this to get broken like gold. I'm looking for this level here to get broken on the downside and then continue running lower. That's what I'm looking for in silver as well. What's this? Doing those. Dixie. Remember we wanted the pound and all that to go higher? Look at that. Ripped right up higher. Nice. Very nice. Institutional order flow entry drill. Sweet. Well, that's what we were looking for in Euro and GBP. I hope some of you guys got that. If you did, good for you. This isn't stuff I want to mess with maybe in 20 years or so. If I'm around in 20 years. This is back and forth in here, euro dollar. Banks holding on. Change in direction. Body breaks above it. Come back inside it. Send it higher. Pay yourself at the high. There's a nice little entry in banks there. So like 1% return on the day or 2% return on the day. That's it. Swing low. Look at the first candle. Bull candle to the left. Body trades above it. Comes back inside it. Sends it higher. Wait for the new high to get taken. It does. Look for an institutional order flow entry drill. This is just alpha or the A plus setup. You just went higher. You didn't even get a B, an A or a B. You just got straight A. Take off. Wait for this high to get taken. The next bull trap Bull trap's taken. Look for that mean threshold of that bull trap right there to hold price. Watch, 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 watch. Boom. Hits it perfectly and leaves. Wait for this next bull trap to get taken to the upside. It does. Does it come back down to the midpoint and hold right there? It doesn't. It goes back down and says, what's the nearest SIBI below me? It's this little tiny guy right here. You stretch it out, you'll see it sitting right there. There's one there and one there, so that becomes the new suspension gap or suspension block. And you trade all the way into the suspension block. There's like it from here. This whole freaking thing is all SIBI. There's a gap there, gap there, gap there. So you got to take it from here to here, that whole chunk. Trade it back inside it. Send it higher. Change in direction. Body breaks the high here. Also takes the first candle to the left. Trade back into its mean threshold right there. And then you go higher. So that's the DAX. Look at Robinhood here. Look at that change in direction right there. Perfect entry for a short in Robinhood. That's 87. That's 20% drop in that in about 3 days. If you shorted that, 87 all the way down into a discount box to box trade right there inside that little box. So that's like a box to box trade, 87 to $70. So that's 70. That's 16. It's just over 20% return. Crazy. Now, if you shorted that with options, that's huge. Oh, Shopify's right in here. That's a nice little potential buy for scale in. You don't want to see it drop below here. Otherwise, this low is the target. But that'd be nice for a run back up into a premium. So this is box to box. You see how it dropped below it, came back, tagged it. Now hit the second box. That's box to box trade there. Shopify. Okay, that's it. That's it for me, boys and girls. We'll look for a run up into this guy here and that guy there. I hope you enjoyed your stay. You're very welcome, Derek. Thumbs up, like, subscribe, you know, the whole 9 yards. Appreciate it, man. Thanks everyone for coming out. Right back at you. Sending the love, my friends. Party on. Send the love. Be happy. And I'll see you guys in the morning tomorrow. Tomorrow we can expect you're very welcome, Miles. You're very welcome, my friend. Watch for a retest of this here and that midnight open and see if that midnight open sends that higher. Okay. Yeah, right back at you guys. Thanks for the love. Appreciate it. And there's your first tag coming in now at 38. Is that 38 right there? 36. 38 is our first objective being hit here. Potty. Yeah. Okay. So enjoy. I'll see you guys tomorrow. That would have been a freaking dandy trade if I held on to that one this morning. Follow the rules, man. Follow the rules. Anyway, enjoy. There's 38. Come on. I'm going to at least stay here till I get my 38, which is that first P1 there. Just give me P1. I want to see P1. Let's go. There. Now this stop loss is going to be pretty tight. I don't want to see this give way now. I'm just one tick or two ticks below this first candle here. You're welcome, Shepard. That's the retest to the midnight we're looking for. Send it up now. Okay, I'm going to let that sit there and see what kind of damage it does. I don't want to see that last little up close candle there get closed below. I'll put another one right there, right on the midnight, and see if we can't get the rest of that. Anyway, good luck. Hold on. Keep your leverage low. Stick with your rules. If it gets taken, then lunch hour is a bitch. Just about to do. Fucker. There you go. It took me out. Said, thanks, Darren. Now we'll go higher. Anyway, that's it for me. I've taken my little lickings and beatings today, so thanks for the help there. You're welcome, Hans. I'll see you guys tomorrow. Good luck. If it breaks this low here, look for a potentially big, deep run here. You're way up into the premium portion of this range. You're just clicking off of the bottom of that candle there, which is what is that candle? Low is 34.50. What's the high of this one here? 35. So you've just tagged the bottom of this breaker. And that if we get a reaction off of that right there, and we start breaking this low here, look for another run back down into this BISI here. And remember that 5 minute that never got an opportunity to get hit? Keep your eyes on that sucker down there. So that'd be my target. Looking for this guy here at 350. all the way to 318. Anyway, that's it from me. Love you guys. Thanks again for tuning in. I'll see you guys tomorrow.